Well, hello there and welcome to American Heritage Lending's webinar on short-term rentals. We're just going to give everyone just a few moments here to go ahead and finish joining before we start. So give us just a moment, please. Thank you. Okay, give us just a few moments here. What is it? About a minute into it. So let's see, I see a few more people attending. I'm just looking at the attendee count. It's going up here, which is a good thing. So give us just a few moments. When it slows down, we'll go ahead and start. Okay. Perfect. Okay, this is just a few moments. Okay, it looks like we are slowing down. We're all, nope, I take it back. We just had another 15 people jump in real quickly, which is good. So we'll give them the benefit of the doubt. Okay. Well, it looks like we're tapering off a bit. So let me just go ahead and get this started a little bit. And first off, let me go ahead and introduce myself and so forth. So first, I just want to say greetings and welcome to Originate More. This is American Heritage Lending's webinar series. Today marks our 5th webinar of the year, and our topic of today's discussion is short-term rental loans. My name is Tony Gast, and I am the marketing manager here at AHL, and I'm honored to be your moderator. I'd like to introduce Jamie Gilso, our EVP of Third-Party Originations, and Jackie Weed. She is our EVP of Operations of our TPO division. Both Jackie and Jamie will join us with a wealth of experience, and today we'll be sharing invaluable insights with you. So before we get started, let's take care of some housekeeping items to ensure an enjoyable experience for everyone. Please feel free to actively participate throughout the webinar by submitting your questions in the chat box you'll find down below, and our expert speakers will address as many questions as possible throughout the presentation. Please note we have dedicated some time at the end of the presentation to address any remaining questions and to ensure all your questions are answered. So please note this webinar is automatically being recorded, and a link will be sent to you via email at the conclusion of this session. So now, without further delay, let's get started. Jamie, if you don't mind, I'll hand it over to you.
Great, thank you, Tony, and thank you everybody for joining us today in our latest series of Originate More, where we really try to help all of our partners, brokers, lenders, etc. Just learn some tips to help them do just that, originate more loans. Again, my name is Jamie Gilso. I'm joined by Jackie Weed. We'll be your speakers today. Just a quick agenda. We'll touch briefly on who we are here at American Heritage Lending. Quick overview of the short-term rental market, just trying to give you some facts and some data, some numbers on what this market could be for you, the potential. There's a lot of it out there. And we'll try to give you some tips, as always, on where to originate more of the business, perhaps how to originate more of the business, and once you do so, how perhaps helping, partnering with American Heritage Lending, we can close some more loans. So, real quickly, who are we at American Heritage Lending? We are a full-service non-QM lender nationwide in 48 states. We were established in 2008. We've got a corporate office in Irvine, California. However, operations teams are throughout the U.S., so we have all time zones covered from a service perspective. Our management team has a deep background in non-QM. in non-agency lending in general, going back decades. So we understand this business. We're very comfortable doing it. It's not something that we just started doing 14 months ago. And we think that shows through in a lot of the loans we write. So we are a lender that you can trust. We've got a great seasoned staff of non-QM veterans. We're proud of our staff. We've got a great culture, so we put that on display here, which is smiling faces. Again, we do very, very well flexible underwriting on good common sense loans. We're lucky enough to be partnered with one of the larger securitizers of non-QM mortgages. So these are our guidelines that we write to. We make roughly 38 to 42% of our exceptions each month on our funded business to our own guidelines. And again, we're comfortable doing so based on the loan if it makes sense. And because of that, we've got great staff, again, that can help you, the originator, structure your loans if they're unique or scenarios, or if you're not familiar with this type of business. By all means, our account executives are very well versed in our products. We've got a great scenario desk, so happy to look at anything that you may have that you think could be a viable loan. I'll just quickly touch on products. We do a full suite, again, of non-QM products with wrinkles and niches. So like many, we do bank statement loans, but one of our advantages is we have a floating expense ratio, and those ratios go as low as 20%, sometimes lower, so we don't have a hard and fast floor. A lot of DSCR offerings, like many, but we do go up to 85 LTV on a purchase single family. We've got some unique features in how we configure the DSCR ratio, such as using the 1007 over the lease when it's beneficial, or vice versa. We've got a proprietary primary bridge loan, primary residence bridge loan. We can do that as a standalone. If a person wants to sell the house and buy a new house and need equity, or in a conjunction with the purchase as well. Great foreign national offerings. Very strong in condos and condotels. Again, we are approving those projects in-house. And asset depletion, P&L, and loans up to $4 million. So pretty robust offering. Again, we are nationwide. We're in 48 states in some capacity. Business purpose only loans in New York, in Hawaii, as well as a couple other states. One of the few non-QM or true non-QM lenders that have a full TRID license in the great state of Massachusetts. Go Red Sox. Tough year for us. So why would you want to partner with us? Again, you saw great product offerings. If you reach out to your account executive or shoot an email, we'll get you some help. But a lot of stuff in there. Common sense underwriting. You'll see some examples here today. Jackie will touch on why we made these exceptions. Probably one of the better portals in non-QM. We hear that from our customers. They tell us it's very akin to an A-paper portal. You can upload your loan, register your loan, lock it right there, disclose it with a touch of a few buttons. There's no Excel spreadsheets in the background. Very, very intuitive. We offer delivery across all channels, so wholesale, non-delegated correspondent, as well as fully delegated. And as a partner, you can bifurcate your delivery across channels. So you could do some loans wholesale and some core. We feel we've got some of the best-in-class turn times in non-QM. Majority of our deals are from registration to clear to close in 20-something days or less each month. So we think we're a viable partner for you as you do find more loans to originate. So let's touch on today short-term rentals. Just real quick, I thought, talking to some of the folks here as we put this together, just a live example. A few years back, my wife and I rented a short-term rental. It was a house here, Anna Maria Island, somewhere in this little island you're seeing on your screen. It was an awesome house. We really enjoyed it. The beaches looked pretty good, and they were. And we liked it. And we looked to rent it the following year, and the price had literally doubled, at which point we didn't rent it, unfortunately. And so, real life story of some of the potential in certain markets for STR. That kind of growth has probably cooled a bit, to be honest with you, but it is still very, very much a robust business, as you're about to see. So what is a short-term rental? Well, technically, it's a rental that's 30 days or less by many definitions. That being said, certain states and jurisdictions do have caps or limits or don't even allow STRs. Thankfully, many of the STR sites like Vrbo's or Airbnbs do show those. Of course, it goes across all collateral types, so it's vacation homes, but it's also condos and condotels, short-term urban rentals, etc. There's a reason why many folks have shifted towards STR as opposed to staying at the Marriott or the old Motel 6, where we'll leave the light on for you. And there are good reasons. And if you just look at some of these boxes, you'll see quite frankly, sometimes it's nice to rent a house rather than a hotel room, particularly for families. Things like food prep and laundry. Think of the Disney area, where rather than staying in Lake Buena Vista in one of the hotels, two families could get together, combined 8 kids, rent a nice 5-bedroom, and every night they can throw in meals and save a lot of money. But it also has to do with generational stuff. Our son/nephew is 27, and when he travels, he doesn't stay in a Marriott. He gets an Airbnb. And of course, different work schedules as things change and work from home becomes more accepted, particularly in certain industries, STRs do come into play. So let's look at some numbers. That sounds great, Jamie, but is there any business there? Well, the short-term rental market is a $64 billion industry in terms of revenue, so there's a lot of business there. At any given time, there's about 2.5 million vacation rental listings out there. Average daily rates are good, over $300. So again, this is nicer stuff. A lot of overnight stays every year happen in this country, and of course, the resort condo segment, by no surprise, is probably one of the fastest growing segments in STR. Although some of those locations may surprise you, as you'll see soon. Again, some data here for you. This market looks like it should continue to grow for years to come. So the idea is, if we can give you a couple nuggets or morsels today to help you start breaking into this market, do business with the folks that specialize in STR, that you'll have a nice vein of business to keep tapping into and do good business with good partners with for years to come, because this market should continue to grow. So where can you find some of these short-term rental loans? Because there's plenty of volume out there. Let's just start with some of the most expensive prices per night. And again, STR, I showed you Florida. That kind of comes to my mind, at least, Disney. But look at the top 2 here. They're high-end ski areas. Vail and Park City, beautiful areas. A lot of short-term rentals there. Wonderful loan sizes, by the way. So what do you think the property looks like? We're all originators on this call, right? For the most part. And a lot of folks' compensation is based as a piece of the loan amount. So where you hunt might help you a little bit. And so, what do you think that property looks like in Vail, Colorado? Probably pretty nice. It's probably a $2.2 million condo or something. We've got a rep in Colorado who's one of our best folks, one of our best operators. He does a lot of high-end loans, and there's plenty in that area. So you can see there's a lot of good loan sizes out there for you to find. Here's some occupancy rates. Again, some of these areas are pretty common. There's plenty of Florida towns represented in here, as you would expect. But look at San Fran, and look at number 7, San Jose. Those are probably tech related, right? So now you're getting into an STR market, not just based on vacations or Disney. Now you can start being a little more selective on how you may look and hunt for this business and originate more in this business by looking at certain industries, perhaps. Look at New York and Boston. Again, that's, Boston is my backyard, but it's not necessarily a vacation zone for many people. But there's 32 colleges in Boston with 250,000 college students a year coming in. They have family, so they come and visit for a while. Jackie's daughter graduated from the best colleges in Boston. She probably spent some time up there in short-term rentals. So again, it's not just beaches. It's all kinds of areas where you can find and originate these loans. So how do you find some of these? So Jamie, it's a big market, and you gave us some stats. Well, we just talked about start with a market, start with a geographic market. Again, STRs aren't going to be everywhere. They're not even legal everywhere in many cases, but they are prevalent in many areas. So start with identifying that geographic market. As we saw, it's not just beaches or beach areas. You want to connect with people who do that business. For example, perhaps realtors who handle short-term rentals. Give them a call. Let them know. I mean, what do we know about short-term rental financing? Again, we're all originators on this call for the most part. It's not readily available. It's not necessarily a Fannie Freddie product. It's not necessarily a local bank product. In some cases, it may be, I understand. But by and large, STR financing is not well known or readily available. So let them know that, hey, I understand the STR market. We've got great products. And then, of course, partner with somebody like American Heritage Lending who has offerings to help you fund the loans. So probably great in theory, but let's get some examples. here's a listing, right? So we know that Florida is an STR market. So Megan was nice enough to go on our side to go through and just look at live listings. And these are, with all due respect, these are kind of Glengarry, Glen Ross leads, showing my age, but look at this great property, right? You've got a place on the beach, good looking property. It says right in the listing, condotel, okay? Look at the purchase price. What's 75% of 725? It's a pretty decent loan size. That's what it is, math aside. So, but down in the bottom right, what do we have for you there? Well, Ron, and I'm not going to pronounce that last name. It's probably tougher than mine, so I'm going to be polite to Ron. But Ron has this listing live, okay, or did at this time. And this is a condotel, so it probably is a short-term rental in many ways. Ron, as a listing agent, if he specializes in stuff, probably knows that STR financing can be difficult. So I would be calling Ron and saying, Ron, great property, love your thing down in Daytona Beach Shores. Do you have trouble financing these? Because we have lenders that specialize in this stuff. Here's another one. This is actually a $1.1 million purchase. I'm gonna start charging you for some of this stuff. Another, look at this beautiful property. We're in Hawaii now. Again, we identified a geographic market that made sense. We found a listing, condotel right there. Well, it's probably got STR or is STR. Once again, you've got the listing agent. Her name can be pronounced, unlike mine, Linda McCabe, and all her contact info. And it's the same thing. You look at that. It's pretty good looking water back there. So these are good properties, good loan sizes, good borrowers that do not have a ton of financing options, at least by traditional standards. Just one more, and again, I believe now we're back down in Florida, Sanibel Island area, beautiful spot, $579 purchase price, says right in the listing condotel. So here's some ways you can really hunt for STR business with live listings, by the way. However, there's more spaces. You think of builders and developers who again, put a lot of capital forward to develop these properties. They know that while they'll get some cash buyers, they will need people to get financing from mortgages to ultimately sell out these projects. These are great sources of STR referrals. I don't want to steal Jackie's thunder, but again, we do a lot of this stuff or all of this stuff in-house, particularly condo approvals. So we had a scenario with one of our partners in Florida where they had the exclusive with the realtor and builder on a project. It was a Weston condotel project. And we pre-approved the project for them so they could now build and sell with confidence. I think in phase one, we pulled out about 15 units, and phase two was 10 or 12. So that was a win-win. But builders and developers, they need financing generally to sell out their projects. Real estate companies, management companies. So going back to Anna Maria Island, for example, within that island, I noticed when I was there, there's about 3 management companies that actually handle all the rentals for the owners. Well, those are the folks that are in the business living it every day. Some of those real estate management companies actually own their own properties as well. So those would be good sources to call on and let them know, again, that you've got awesome STR products, great partners, military bases, a lot of STR activity there, of course, makes sense. People want to see their family while they're away. And we already touched on industry and medical industries, whether it be the tech, meds, etc., and universities for that matter. So there's a lot of places to look for STR. And once you get there, again, you can look for listings that would ring or make sense of STR and just call those agents. And we can originate some more loans. Once you find them, so STR is a big market. Once you find them, you'll need help closing them. So you need a good partner. I'll touch quickly on just some of our highlights here of our short-term rental program. We're up to 75 LTV purchases. Loan amount up to $1.5 million. We go higher than that case by case on exception basis. FICO goes down to 660. We'll do STR on all of our collateral types, including condotels and non-workable condos. And Jackie will probably touch on this with one of our examples, but again, we're approving these things in-house, so we see plenty of condo projects with non-traditional insurance. Maybe it's a higher deductible for the HOA, maybe it's ACV on the roof. Foreign nationals are allowed, and we actually allow some gift funds. And then, Jackie, you should probably opine here because I'll get it wrong. But I think there's been some changes in the law lately in terms of 1007s and STR use. Could you touch on that, please?
Surely. So we're finding is really not accepting, or the appraisal community is not accepting short-term rentals on 1007s, but we do have a solution, and one that's actually really good because it truly captures a more real rental dollar amount for those properties, and it's STR Pro. It's a nationwide product, and surely we can share that information, but the report itself is very detailed, and it has really good rental comps, so that's really helpful. And you know, to Jamie's point on originating more, you can also see where those other comps sold and who sold them, and you know, there you go. Now you have some folks that you can reach out to and see if you can help them.
Yeah, that's great. Jackie, just for the audience, can you touch on how we here at American Heritage construe or figure or calculate the DSCR ratio on STR, receipts or at Pro or et cetera?
So, you know, there's two ways. On a purchase money loan, if in fact there's been no history of short-term rental on the property, we're going to use the STR Pro and a 75% rental value for that. But if in fact that property has been used as a short-term rental and it's a purchase, the seller is willing to give up their 12-month history of short-term rental verification, we can use that dollar amount. If you have a refinance and the borrower is listing the property with Airbnb or something of that nature, then we will actually use the net rental from Airbnb. So that's minus any management and cleaning fees, and we'll use 100% of that if we have that 12-month history of Airbnb income.
Awesome, thanks. And that's important because what we've seen in the past, folks, is particularly with STR, the appraisers don't have access from traditional online means to get the full scope of the rental income. And sometimes as a result, you're getting less bang for your buck, for lack of a better term, and how much income you're using. So using the actual printouts or receipts in Verbo, Airbnb, et cetera, is a real advantage, you know, of course, sans any expenses. Awesome, thank you. And then we'll just jump into some scenarios. I'll let Jackie talk through, but these are deals that we actually funded that had some exceptions, and I think they're probably symbolic of some of the things we do here.
So our guidelines call for, on condotels specifically, minimum square footage of 500 square feet. This particular example was a property that was 400 square feet. You know, the compensating factors were the borrower's FICO score, they had assets, there was a kitchenette, and I'm going to define that a little bit. So what we look for if we're making any square footage exceptions is a kitchenette that actually has some sort of a cooktop if it doesn't have a full stove. And I'm not talking about one that plugs into the wall, but one that's built into the counter. And then of course, you know, a sink and a refrigerator. Our philosophy on these properties really is there a place for the borrower to prepare a meal, to rest, to bathe, and, you know, entertainment? So, you know, we look at that kind of as a whole, and the little kitchenette is the most important part of that whole property. I mean, regardless of whether it has a bedroom or, you know, combination living room, bedroom, we'll look at those, and we will look at square footage exceptions, again, if they make sense.
Sure, just don't have a George Foreman grill as your cooktop. Fair enough. Okay, here's another one. Sure.
So this was a condo. We did a rate and term refinance on this property on our Investar product, which is our DSCR product. The homeowner's insurance, because of the cost of insurance anymore, and certainly in many geographic areas, this particular association had an actual cash value for the roof. Well, the roof was over 12 years old, so you know that becomes a really big exception for the actual cash value. In this particular case, the HOA had sufficient reserves. They actually had a line item for the roof where they were reserving for roof replacement. The life expectancy of the roof was another 10 years. We had an engineering report on that, and we had a solid DSCR. So we're okay with that. We'll also make exceptions on deductibles. So we see a lot of times wind and hail deductibles are greater than 5%. So, you know, if it makes sense, we'll make those exceptions too, and those become non-warrantable because Fannie Mae won't allow that.
Yeah, great stuff. And I'm just going to pack that a little bit because we probably have folks here that may not be as experienced with some of the condo business. But if you're doing condo business, particularly in Florida, Hawaii, and some of those other markets, it's tough to get full replacement cost in some cases. We all see hurricanes in the news, the last few years. So unlike traditional policies where you're getting full replacement cost on the entire structure, what we do see, to Jackie's point, is you get guaranteed replacement cost on everything but the roof. And the roof, you get the value of what's left, cash value. And of course, that is not only non-warrantable, but some lenders won't even do those loans. We keep preaching here common sense and our ability to lend our own money and all those things. And here it is, right? Jackie just gave great bullet points. This makes perfect sense. There was still good life expectancy on the roof. There's plenty of reserves. So just a great example. And Jackie, I apologize, but I probably stole this one from you earlier, but
No worries. To Jamie's point earlier, we've actually approved several developments. We've seen a bunch of those that are in Central Florida, kind of in the Orlando area. And it actually afforded our broker the opportunity to become the preferred lender for that complex with the developer, but not only that one, but the next one that the developer was developing. So in this particular example, this was being done in pieces, kind of, or different phases. So the one tower that we financed was complete. The other towers were still under construction. We were okay with that. It was a major hotel brand. And so we like those a lot. And this particular borrower was a seasoned short-term rental investor. So they really knew how to handle short-term rentals. But again, because it's a major hotel brand, that gives a little bit of comfort because the rentals are primarily done through the hotel rental desk. So not mandatory. Of course, we don't like mandatory rental pools, but that is an option for the person renting the property.
Yeah.
And we are not afraid to approve these complexes. There's a lot of documentation that we'll ask for to approve them, but we'll take a look at it and we will give you a blanket approval on the complex.
Yeah, that's that is great. Thank you for the breakdown. And again, the spirit of Originate More in general is, with this webinar series, is to do that, Originate More. We don't get on here and give you our matrix and tell you how great our matrix is. It's more about, here's a subset of business that we think has value. It's a good size segment of the market. Here's how you can find some of the business. And of course, we would like to help you close some of that. But the idea is for you to originate more in most of these pockets of business pieces that we go after in this series is meant to be continuing referral source. And Jackie touched on it here. As a result of getting the exclusive, our partner, the loan officer, then of course was able to lock down the next project with that builder. So real value add. Thank you. So, in summary, real quick, as you saw, hopefully the short-term rental market is growing and very lucrative. $64 billion a year in revenue, over 2.5 million rentals at any given time online. Good loan sizes that are usually tied with these properties, which again, probably means some better commission checks for some folks. They do require non-traditional financing, particularly if you get into things like ACVs on roofs. So you need to be partnered with an institution that not only has good products from an LTV and matrix perspective, but just as importantly, understands the business, like American Heritage Lending. And we can help you do good loans and ultimately originate more. So with that being said, we'd like to open up to any questions and we'll try to answer them, and anything I can't, I'll ask Jackie to bail me out, which would be most of them.
Well, I have a couple here that have been posed. So let me go ahead and make sure that I go ahead and answer this correctly. The question was, let's see here. Give me a moment. Okay. Will you do an exception for a cash out refi short-term rental? It's held in an LLC. Now, the LLC is owned by 4 siblings, 25% each. Would you like to only have one borrower on the application? Like 3% LTV, very high DSCR, oceanfront home in Malibu, $500,000 loan amount.
Do you want me to take that, Jamie?
Yeah, absolutely.
So we can have just one borrower or as many of the 4 borrowers as you would like. We do require 51% of the members personally guarantee the loan. but we can work with just one member as long as they own 25% of the entity as the borrower.
Okay.
So in that scenario, we could do it with one borrower, but we would need a total of 3 to sign personal guarantees to get over 50.
That's right, to get the 51%. And your scenario with regard to the loan itself is a non-issue. It's not a problem.
Okay. Another question here is, let me see here. It says, asking about sources and so forth. Asking, what is your source of finding short-term rental listings besides Zillow?
You know, Zillow's obviously a great one, but when I've done some of this in the past, I just start with what I would call low-hanging fruit, which is, you know, beaches or ski resorts. But I would go to that area and just you know, Google condotels or condo or short-term rental listings in Vail, Colorado, or, you know, short-term rental properties in Anna Maria Island, Florida. And then, you know, like all Google searches, you'll get a myriad of responses. But from there, you can usually ascertain some live listings. Some may link you back to Google, but there'll be plenty of others. Some US real estate markets, particularly in Florida for that matter, don't all just use one NMLS. They get very proprietary sometimes with their listings. So in some of those markets, actually, they're not all on Zillow in some cases. If you do some sleuth work, you will find listings that are just, you know, on a proprietary web page or on a smaller NMLS. And then the other thing is we touched on, you know, the industries. So again, you know, tech, healthcare, defense, you know, Northern Virginia, a lot of government jobs. We were just talking last night about a ton of STR in those markets. So, you know, just try to reverse engineer. Who would need an STR? Well, yes, vacation folks, but potentially professionals, potentially folks visiting military, colleges, etc. And then use that same methodology of looking for those listings.
Okay, I have another question here. This one is in a 3-unit property, can 1 unit be considered short-term rental?
So that's a pretty big exception. Typically, we don't like to see multifamily as short-term rentals. With that being said, there are some areas where that is really common. That would be an exception. I'm assuming in this scenario, the other 2 are long-term rentals, and then you have 1 short-term rental. So depending on the borrower, the LTV, the nature of the loan, it's something that we could consider, but it's a double exception, right? Because it's a multifamily, and then also you have 1 unit that's short-term rental and 1 unit and 2 units that are not. But speaking to that, I'm going to elaborate just a little bit. So I personally live in New Jersey, and at the Jersey Shore, of course, you have your short-term rentals during the summer season. But then, you know, come September, those properties now turn into what's called winter rentals, and they rent those properties from September or October to May. So we actually will allow a combination of that. So the short-term rental for the summer months, and then you've got kind of a midterm rental, if you will, for the winter months. And that is something that we can look at and work the numbers on.
Okay, perfect. Let's see here really quickly. The next question we have is, let's see here. Do you bridge loans? Okay, let me see real quickly if I answer this properly. Do you bridge loan? Oh, it's asking about the bridge loans that we've had. Does it require the borrower uses AHL on their next purchase, or will you do just bridge loan on subject property and only close that 1 loan?
We will do a standalone bridge, yes. We have both options. So we have a standalone bridge where we are not doing the second loan or the acquisition property. We're just doing the departure residence. It's a great product. It's we will give the cash out. We'll do a first mortgage refi. We'll give the cash out up to 70, in some cases 75 LTV to put towards the new purchase. It's a wonderful product in that it's true, you know, short-term money. The house should be on the market. They do intend to sell it. It's a 12-month loan, interest only, with the payments deferred. So the customer has no cash flow pain during the process of moving. There's no debt ratio on that loan either. So it's a great standalone product. If for some reason your borrower does not qualify for Fannie or Freddie on the acquisition, we can help there as well. Maybe they need a bank statement loan or non-QM loan, or maybe it's just a debt ratio issue. What's nice about our acquisition loan, if we do both loans, we underwrite them simultaneously. And when we do on the new house for the acquisition property, we do not include the old payment in the debt ratio. So we offer both, to answer your question, including the standalone.
Okay, let's see here real quickly. Another question that's come up. Let me give it a moment. Apologize. Okay, here we go. Borrower was selling a home in, looks like Florida, needed cash to put on a home in Colorado where they will be moving. I'm not sure if that was a question. Oh, I take it back. This is part two. Just give me a moment here. I was told a few months ago AHL would require borrower to use AHL on the next purchase loan as well as the bridge loan. Is that still the case? And I believe you answered the case on that, but we have two options, correct?
The guidelines have been enhanced roughly 60 days ago or so. But
okay.
Since that, yes.
And that's what it was referring to. The follow-up to that was that the borrower was selling a home in Florida, needed cash to put on a home in Colorado where they were moving. Okay, let's see. Here's another question just regarding the bridge loan that you had mentioned. Somebody has asked, do you allow the new purchase in an independent living at 55 plus?
We do.
Okay, that's good to know. Let's do this.
Geez, you know, you think about originating more. That's a great. That the person asked that question. That's a really great service they're doing to their borrower. I don't know the deal, but you think of that particular scenario, you probably have somebody that's been in a house for a while, has good equity, and doesn't want to mow the lawn and paint the shutters anymore, and would like to get into a nice 55 plus and have a clubhouse and a pool. And there's a whole bunch of people that turn 55 every year and look to do that. And so when you think of sourcing business and originating more, maybe we should just do a webinar on that. Like, the 55 plus community and how to help them use bridge loans to get into that new. So I get excited. I'm a sales guy, so pardon me, I didn't mean to digress, but kudos to that originator for that transaction.
Okay, here's another question. Are you able to provide a list of the approved complexes that you have already funded in?
We don't, partially because they change so often, and we want to be accurate. So we don't have an approved list, although we're certainly glad to look to see if we've done one in the past, but we don't have a list.
Okay, let's see here. Let me go through the very end. There's a couple others that are coming up here. Let me see here. Lars, let me see here. I'm just speaking to the group that's on here. If I've missed a question, please feel free to put it back in there. I'm not sure. I believe we've answered all the questions that are in there. A couple of them were just kind of a follow-up to what you spoke to, but I don't want to cut anybody off just before we end this. So if there is a question that we have not addressed yet, please feel free to ask that question again.
One last thing for the group too, we just rolled out a feature where we allow you to finance the realtor fee. The borrower can actually wrap their realtor fee into the loan. If you're in the purchase money business, you deal with realtors regularly, and you've been made aware of the recent NAR ruling, some borrowers and buyers may now start negotiating their own buyer agent fee. And so we have the unique ability they can actually finance that buyer agent fee into the mortgage. So knowing that might help you get into some more realtors. And if you'd like to learn more, please reach out to your account executive.
Here's another question that's a pretty good question we've been asked in the past. Do we have a map that would help indicate and show the states that don't require me to be licensed in that state to do a business purpose loan?
Well, so not quite. What we have is our rate sheets, which are available within your broker portal, or your AE can send to you. Our rate sheets will list on the bottom the states that you need a license for. But actually, Tony, as you know, you yourself and some others have just recently worked on a nice little tool that I think will be posted to our webpage at some point. But we've put together, Tony's and some others gracious enough to put together a nice cheat sheet for the brokers to use, where it just shows each state line by line, what license is required or not, red or green. And so we hope to have that on our webpage soon. But in the meantime, again, reach out to your account executives, actually, and they can get you a copy of that for sure.
Absolutely. I was just going to say that because I was just this morning, we finished editing that as well. So yes, if you're on here, it's something you're interested in, you have all of our contact information on here. My email is on here as well. So if you don't have a set account executive that you're working with us, at the current time, feel free to, my contact's on here. I can get with Jamie and make sure we put you in touch with somebody to answer these questions as well. Let me see here. What else we have? Okay, let's see here. A couple people were also questioning about the business purpose loan graph that we were just mentioning in that chart. It's very helpful to them as well. So for those that are inquiring, I do have your contact information. I can make sure that we send that to you as well. So we can be a bit proactive. We'll jump on that, make sure you have that.
Thank you.
Okay. Well, I don't see any questions. And as just we mentioned earlier, we like these to be an opportunity where we're here to help you originate more. If there's something that you all think that would be really helpful for you next year, being a strategic partner with you, let us know. We're here to just not talk about our products. It's just here as a company to let us know how can we help you originate more. So if there's something specific that you guys can think of, please let us know. I'm sure Jamie and Jackie would welcome that as well, or any sort of follow-up questions as well. We appreciate your time. We don't like to let these things go on too long. We know everyone's pretty busy now, but we just really want to make sure we appreciate everyone's attention and questions and follow-up emails. I think that's it for you, both Jamie and Jackie. I didn't have any other questions. All right. Anything you would like to follow up with? All right. Well, thank you all. Just as to reiterate, if you're still on here, as soon as this recording renders, you'll receive an email and you can play this back at your leisure. Have any questions? And then all of our webinars are also posted on our website. So if you'd like to see anything else that we discussed in the past at all, feel free to go ahead and look at that www.ahlentpo.com, and it's up the very top of the website. So it's a great resource. All right, everyone. Well, thank you for your time. Appreciate it. Thank you, Jackie.
Thank you. Bye.
Bye-bye.